Good afternoon, everyone. Really exciting session today with this panel. To my left, Dan is Managing Director, eToro UK. In his role, he leads the growth of retail digital investing services in the UK with a deep focus on product innovation, regulatory compliance, and investor protection. Beside him is Laura, Digital Assets Regulatory Lead at PwC UK. She advises both traditional financial institutions and crypto-native ones on financial services regulatory policy making, supervision, and implementation all over the world. And beside her is Professor Dan. He is a partner and head of the UK at Gosai Law. In his role, he combines academic rigor and legal practice to help emerging tech, digital assets, and cybersecurity clients scale securely. With that, let's get right into the discussion. So this session is called Positioning the UK to Become a Digital Asset Hub. Maybe just let's address the elephant in the room. Is it a digital asset hub? Can it be one? Laura, I'm looking at you.
Okay, I'll start. It's definitely not at the moment. I think it's clear, but sure, we can be at least a regional leader, but we just need to get out of the locker room and start racing with the others. Also, digital assets is quite a big beast, so need to think about where we want to lead. You can't be the winner in everything, so where do we have the right to win? Dubai is attracting a lot of exchanges. The US is shooting for stable coins. Could the UK's place be, for instance, FX, stable coins, or tokenization, the plumbing, the marketplaces, or anything else? But the key is that we are way behind the other global hubs.
Pretty damning indictment. Daniel, what do you think?
I'd agree with much, if not all of that. I mean, just to have a more upbeat note of perhaps optimism, I think we are well placed. I mean, in terms of, we always have been a prominent financial services hub. I think that's undoubted. Certainly a European leader. We have access to amazing entrepreneurial talent through universities, accelerators, incubators. So on paper, it should be really promising. It should be really good, but we haven't really optimized, the talent and the track record. And as Laura said, you have other players, for example, Dubai, but there's others as well that have distinct advantages in terms of, ease of entry to being authorized, much more comfortable tax or no tax regime, and various other factors that I think we have to realize it's a global game, so you're not just competing locally, domestically, you're competing on the global stage, and that takes more than we're doing at the moment.
Got you. I think we're going to spend a bit of time on that global dynamic a little bit later on. But Dan, maybe from your perspective, I guess, if I think about the retail investors on eToro, do they care? Just to add an extra question in there, do they care if we're a global digital hub?
I think it's important to have a strong ecosystem. Richard, is anyone from the FCA here today? Okay, great. Well, I think what we could say with that in mind is the shame of it, I think, from that perspective, is we had lots of facets to our industries that could really have capitalized on the UK being a crypto hub. If we look at the success of our brokers, if we look at the success of our financial institutions, I think we really did have an opportunity that we could have capitalized on. And clearly, that's not happened. And I think regulation has had a lot to do with that over the last 10 years. Do I think clients care? Yes, I do think clients care because they like to be at the center of things. And in the same way that, if I compare it to, say, stocks, UK people do like to trade UK stocks. US people do like to trade US stocks, and okay, that's crossing over, but I think there's still an element that you like to trade your domestic market, and if your domestic market is strong in a particular asset, it means that you're familiar with it. It means that you want to engage with it.
Super interesting. Okay, we're going to dive into all of that a little bit later on. Let's think about the journey towards becoming that digital hub, digital asset hub. Daniel, what are the features that a successful regulatory framework needs to have in order to, protect consumers on the one hand, but allow innovation to blossom?
Yeah. So I'm trying to think of a quote. So I think it was Jamie Dimon that said that the sort of the perfect framework effectively is conducive both to businesses and to customers. So it kind of protects the consumer whilst encouraging and attracting business. That's a really difficult balance to get right, and so I think if we're looking at the journey in the direction of travel, I think what perhaps needs to happen here is there needs to be a recalibration in favor toward business. I mean, just to disclose my hand, I'm probably biased because my world is working with clients, particularly universities, accelerators, incubators, but also with, if you like, global blue chip businesses who might be trying to add on new capabilities and enter the UK. And in terms of the FCA authorization, we're quite a hard club to get into. And when people talk about regulation, I think what they often forget is that in the UK there's all these different strands of regulation. So you'll have, when you're talking about a regulated firm, you're talking about a firm that's authorized, as I say, and that's quite a hard door to walk through. So, if you're a startup or a relatively small business, it can be really daunting, if not impossible and expensive and time-consuming to get authorized. And even if you're not authorized, on top of that, we do have plenty of other protections in place in the forms of laws and regulations. For example, things like we have a financial promotions regime, which means that, say you're an overseas firm, even though you could be based in the Netherlands and have a fantastic track record, you're regulated in maybe not just in the Netherlands, but perhaps in other Europe, across Europe and maybe further afield as well. But then when you look to target or sell to the UK, the financial promotions regime kicks in, and especially in the case of crypto, makes it very difficult indeed. So I agree there has to be customer protection, but I think there just needs to be a recalibration to make it a little bit easier, a little bit freer, so that businesses can actually get authorized and can actually thrive.
Super interesting. Laura, maybe from your perspective, I guess, working with institutions and some startups, are there bits of regulation that would, on the one hand, if you got rid of it, your clients would welcome that, or is that strict and perhaps complex and tough regulatory framework actually what's attracting institutions?
In short, we need a reg framework for digital assets, and it's coming slowly. That's what whether you're a crypto native or a TradFi, that's what you need to accelerate the growth and scale. But I'm looking forward to a stablecoin one. I think that's the key. That's the foundation with the current market, foundation for everything else. Also, it's really good to hear that the Bank of England is supporting tokenized deposits. That will be needed. And the FCA just published a consultation today, this morning, which covers some of the crypto aspects. And it looks like they might be rewriting or rethinking the rules of consumer duty for crypto, which is welcomed, as Daniel was saying. My main concern, and again, building on what Daniel was saying, is that we are looking to get a new authorization regime, FESMA-based regime for crypto firms by 2027. And I hope the FCA is well prepared for the applications so that the timelines and the communication will be clear and will keep, because like you were saying, it is a struggle for crypto natives when they don't, under the current registration regime, they don't know when they're going to get it, if they're going to get it. And that then leads a lot of firms leaving for other jurisdictions like Dubai. And for TradFi, from a TradFi perspective, we haven't seen the PRA rules yet for Prudential. But if those are too tight, then it might limit the bank's involvement, which would be a shame.
It sounds like in a world where, AI, digital assets are, threatening everyone's jobs, one group of people who won't be out of a job anytime soon is compliance and legal officers.
No, definitely not. Wonderful people.
Exactly. Dan, maybe coming to you, I guess, how do platforms like eToro sort of think about, your part in, not just the regulations, but I guess transforming those regulations into something that is also an attractive proposition for your investors? But retail investors, I mean.
To a certain degree, we're the worst firm to ask in this regard. So we are obviously a crypto broker, but we've always been a stockbroker. We've always sold retail derivatives such as CFDs or options. We've always done that. So we've always been a firm that is very happy in a regulated environment, but we also had this product that was unregulated. So from our perspective, actually, the moves that the UK has been taking to move crypto into a regulated framework, we were very supportive of. We've already got the compliance people there. We've already got the AML. But I think in reference to what we were talking about there, we are a regulated firm and have been regulated since 2013 in the UK. Our VASP license, which theoretically at the time was just a kind of qualification of your AML procedures. This was before financial promotions came into it. It took us 18 months to get. And we're a fully established firm that I believe gets on with the FCA, and we're able to open our books to them in a way that they wouldn't have had any suspicions about. So it still took a long time for us to jump through those hoops. But we do support regulation. We always want it to be regulated. So for us particularly, it's not proven that difficult. But I'm keen to say, whenever I talk to any other crypto broker, especially if they're overseas, it's hard to come into the UK. And I think you can also look at a number of providers that were offering their services in the UK have decided not to bother. Because it's so difficult to say, well, there's this one country that does things very differently that we've got to abide by. Unfortunately, the level of business that we all get doesn't qualify the differences.
Can I stick with you maybe as a follow-up? How are retail investors engaging with crypto products, on your platform, digital assets more broadly? I guess from a trading investing point of view, what are you seeing there? How are they responding to, if at all, sort of incremental regulatory changes? And I guess to the extent you can comment, how does that compare to other jurisdictions?
Okay. So in terms of, the person who uses eToro to trade crypto, I'd say there's various different slices of who is doing that. So you clearly have the crypto believer that reads the white papers for every single coin, that really understands the framework. They believe in decentralization. They believe in the blockchain as a replacement for other types of financial infrastructures. You've then got the speculator. You've got the speculator who's just looking to profit on price changes. You've got, and it's there, the FOMO person that is just coming into the market because they feel that everybody's is in there, and if they're not in there, they're going to miss out. But I would say, we always have to recognize this is no different than any other financial asset. If you look at agricultural futures, the vast majority of the market is speculation rather than farmers. If you look at the FX market, 6% of the FX market is for people that are actually needing the underlying FX. The rest is speculation. So I'm not scared of that structure to the crypto market. I would say I feel as every kind of new all-time high is reached, that long-established it's a store of wealth feels like it's happening, which perhaps didn't happen 4 years ago, 5 years ago, 6 years ago. We've had this stability for the last 2 or 3 years when we perhaps haven't had it in other assets. So that feels like it's changing.
Got you. And Daniel, maybe coming back to you, just do you feel that is regulation the big unlock here for, I think, fair to say for end investors, for retail clients, there's adoption, there's interest, there's engagement. At that business layer, is it regulation that's the big unlock, or is there something else missing from that puzzle?
I think regulation is a big piece of the jigsaw. There's other pieces as well, but I think, yeah, regulation is a big piece. And also within that, I think also tax. So I work kind of two sides. And one side I'll be giving kind of, if you like, strategic advice to a venture, which will include perhaps, where they might base themselves, which customers in which countries, jurisdictions they might target, and so on. And every single time the question that comes up is like, okay, so depending on where we are, what does the tax look like? What does our take look like? And not just corporation tax, also income tax, because you have to take the money out of the company. I think that's a problem. I mean, getting back to the Dubais, the Singapores, and Malta, Gibraltar, plenty of other jurisdictions that are ahead of the game on that. So I think that's another important consideration too, because also if you're starting a business and startups are being told all the time there's a high, I forget what the official statistic is, but there's a high chance of failure. If you're going to fail, you'd rather not fail with a big, huge tax bill to pay. You'd rather have an exit that's manageable, so you can actually dust yourself off and start again without being in debt. So I think that's part of it. I think the regulation is certainly part of it, because you need to incentivize, whether it's a startup or whether it's an incumbent dominant powerhouse. You need to incentivize that venture to come to the UK, and that's not really happening enough, I think.
So it's probably one of the few times where talking about tax is a good sign, because it suggests companies are thinking about long-term sustainability. I probably should ask, just for completeness, I guess, digital assets have had scandals, have issues in the past. I'll let you name them if you want to, but with that historical, I guess, backdrop, what should London, what should the UK be doing to overcome worries, concerns? What framework should be in place? Are they already in place? What do you think?
So I think just at the start, to put that in context, because I think sort of financial malfeasance existed long before the advent of crypto assets, and we've got a long tradition of fraud in traditional financial markets. So I'm not saying that to say, of course, that to undermine the risk, because there is a risk, but I think often there's been an over-emphasis on that, perhaps because of the challenge to the status quo, especially with decentralization, because if you're saying to banks, basically, we'll remove you from the system, there's going to be some pushback. So, and that's not to say I'm doubting or denying, because it's a fact that there have been those scandals. But in answer to the question, we've got stacks of laws and regulations in place, both old and recent. I mean, in terms of recent, we have the corporate liability for a failure to prevent fraud. So, it's incumbent on companies to prevent fraud. There's a mass of rules and regulations in place to stop all of that. And also, I'd say, for example, if you look at some of the big frauds that I think you're referring to, in many of those, my understanding is that you actually had the FCA warning consumers anyway that to stay away, because they could see events were happening. But I think sometimes we overstate our importance in the world. I mean, many of these organisations, companies are operating on a global business. They might not be based here. They might be based, for example, in the Bahamas or somewhere else. So the idea that we can, prevent all this happening from the UK is probably overstating our importance. But I do think we have the UK can rightly actually hold its hand up on that front and say we have put customer protection, at the forefront. As I say, we've got masses of laws that try to prevent fraud. Certainly, if you look at the FCA, the handbook, and the need for authorization, and as we just mentioned, the financial promotions regime, and if you're trying to, for example, to advertise in the UK for some sort of crypto scheme, the warnings you have to give, that the customer's told, in bold capitals, the risk they take. They're then told that, they have to have a cooling off period and they might want to think about it again. And it's, there's a lot that has been done that we could hold up and say, this is what we are doing. So we're at the forefront. And as I say, and also we can emphasize our record as a financial service hub for traditional banking financial services. So I think actually we've done a great deal in that regard already.
That's good to hear. Dan, maybe coming to you, I guess, with that backdrop, maybe this is a bit of an unfair question, but how much of the risk or perceived risk in crypto and digital assets is down to user error, is down to us misunderstanding what we're getting into versus institutional willingness to do harm or to disregard?
I think
safety.
Let's define what that risk is, and this is clearly from my perspective as a broker rather than some of the other case studies that you might be looking for. So you've obviously got the risk of the particular coin that the person's investing or trading in. Kind of what kind of coin is it? Have they read the white paper? I think we as a firm have done things there that we can point at that say we're helping to mitigate that risk. So, for example, at eToro, we've got this concept of an experimental coin. So where you've got Bitcoin or Ethereum or well-established coins, you open your account, you have your 24-hour cooling off period, you can trade those. There's a huge raft of coins that are maybe meme coins or they're low liquidity that we've deemed an experimental coin. And so depending on the client, depending on their experience, depending on the way that they've completed their application form, we may restrict their access to those coins. I think that's got better in that regard. We talked about the 24-hour cooling off period. So from a regulated broker perspective, the risk of using a regulated broker, the regulated broker now needs to ask a number of questions to analyze the client's experience within crypto and their knowledge. There's a number of questions that they have to pass. These questions are not actually that easy. For a bit of fun, I'll apply to other firms, and I'm not necessarily passing. Then you've got the 24-hour cooling off period. So you've got hurdles in place there that I think can help the regulated broker, can help the client. I think we do therefore then have to be slightly careful that unregulated broker, if we have things within the UK that are quite onerous, both for the client and for the brokerage, it may well mean that we get more people going offshore. That I think is not being mitigated at the moment. But certainly from those first 2 points, I think the situation now is better than it's ever been.
Which circles back, I guess, to Daniel's earlier comment about maybe there's probably too many rules and regulations given what we were doing on consumer protection in general. Lara, I want to come to you and maybe dive in a bit on that UK versus Dubai, everywhere else comparison. I guess we've heard a fair bit about what we're doing here and some of the merits and demerits, but from your perspective, what are the strengths, if there are any, relatively, and I guess where do you see those big weaknesses?
Oh, there are a lot of strengths in the UK, you mean? So the rule of law, the regulators are well respected globally. So there's no doubt that when we get the regulatory framework in place, the UK is a good contender. London's a great city. Tax rules, we could do something about those, especially now that we're not in the EU. So we've got a lot going for it, and I do believe that we will be the regional hub over any of the EU cities. But we just need to get there, and the regulatory frameworks, by and large, from all these big hubs, Singapore, Hong Kong, Dubai, the US, the EU, they all mirror each other, and the regulators are working really closely together to make that happen, because this is a global business. You can't just think about your own borders.
So if we nail tax and this eventual regulatory framework, does the talent flow back here? Does the capital flow back here? Is it that simple?
I'd like to say it is, but it probably won't be, because the others have a head start. But I think we're going to make it. We have a great talent here. The Bank of England is running a great digital security sandbox, which is providing more of that talent and growing these businesses, especially on tokenization. And there is liquidity in London, as long as we kind of find our niche and then run with that, then I can see that we are still a good contender.
Thanks. And Dan, when you look at your colleagues in the other eToro countries, what are you envious of that they might be benefiting from on the crypto side that you'd like your UK business to be doing?
Well, I think actually this is not an easy one to answer, in that I can see a different approach from the clients to crypto in various different countries. So if I think with our US operation, pre-Trump we offered 5 coins. Now we offer 100 coins. If I look in
Trump 1 or Trump 2?
Trump 2.
Trump 2. Okay.
If I look at the UK, I really do feel the decision to turn crypto derivatives off was a mistake. And so I don't, therefore, where I've got leverage in Europe, I've got shorting in Europe, I don't have that in the UK because of that crypto derivatives decision, which is infuriating. But I really would say, actually, and maybe this is when we talk about the UK being a crypto hub, what is absolutely the case at eToro is the UK is using us, reacts to price movements far quicker than some of the other countries. And it can be coin specific. XRP in the UK is incredibly popular. And if there's any news in XRP, the UK moves to it, and the volumes that we see, the price movement, the price actions that we see is far greater. So we certainly are a crypto-loving market, even though from a regulatory perspective, we don't perhaps have the tools that some of the other countries may have.
That's super. Go on.
Sorry, just to add on that, what you just say, I think the FCA did a consumer research a year ago, so a long time in crypto world. But according to that, pre-Trump, it said that 25% more of UK population would use crypto, invest in crypto if it was regulated. So it's definitely growing, and I agree with you on the retail derivatives side as well, and also ETFs would be great to see those.
Okay, so on the retail side, derivatives, ETFs. On the institutional side, regulatory framework and tax. Daniel, when you're speaking to those smaller companies in particular, is that about the sum total, or what else are they perhaps weighing up if they're choosing to stay in the UK or come to the UK versus other regions?
I think it's all manner of things. I mean, because if you're looking to launch a company, you look at, I guess, the quality of life in the place, the infrastructure, all the other nuts and bolts, I guess. So it's but again, going back to that, I think London does have an advantage in many ways, because it is a great city to live. It has got good infrastructure. It has got history and a track record. So I think it is the main two barriers are the two you've mentioned. It's. I mean, say for example, you're just to give you an idea, you're thinking of starting a startup, and you have a conversation with me, and you say, "Look, Dan, this is what we're going to do." And so that's absolutely fantastic. But basically, what you're describing is a challenger bank, And to be a challenger bank, this is your roadmap, and this is how much it's going to cost. This is how long it's going to take. So you're just going to throw your hands up and say, I can't. So it's the door's closed and locked. So that's the problem that we need to look at. But that's at the smaller end, certainly.
And it's sunnier in Cyprus.
Yeah.
And I think London or the authorities here, even regulators, do need to sort of find the spirit of taking a risk a bit more, and not just living in 2008 forever when everybody else have forgotten about it already. So I'm moving on.
I mean, good luck with that. I think that's a wider debate than crypto, I would argue. But
Yes, it is.
I've got a ton more questions, but I just want to. I think the rules are that if you've got a question, throw your hands up and we'll work them in. Go ahead, just shout and I'll repeat.
Yeah, I was going to say for eToro, where is the incentive? You say about your best customers are the people who do well on the platform. Do you then push for further vetting when someone enters the platform, or hello? Or are you just doing the bare minimum on the regulation side, so you can get as many people as possible? Because, what side are you? Are you doing the bare minimum, or are you making sure people know as much as possible, because the people who know as much as possible do the best and end up being your best customers?
I think so clearly we're not doing the bare minimum. And I think we have to approach this really responsibly. And, in a way, you can expect me to say we're going to approach it responsibly. And I do believe, consumer duty, within the UK, and I appreciate this isn't replicated yet in other regulations, but, we've got to demonstrate to the FCA every year that consumer duty is at the centre of our decision-making processes. And we have to, we can't just have it written down in a piece of paper. I have to show throughout the year how various different decisions that we've made, why we've chosen to launch particular products in particular areas, how we've decided to launch that particular product. I've got to illustrate how consumer duty was at the centre of it. But I think if I can present it to you in a slightly more cynical way that perhaps you might appreciate, we spend fortunes on marketing. We spend a lot of money on marketing, and the situation that somebody comes to us, opens a position, loses money, and then walks away and blames eToro for it does not benefit me at all. I want a long relationship with our client base.
Awesome.
I was going to add, so would you push then for as much possible for your users to know as much as possible before they enter into the market, or do you want to add, you're doing this at your own risk?
For example, the 24-hour period, cool-off period, I support. I don't think it's a bad idea, especially if your motivation for investing is driven by FOMO, your friend you've met down the pub. I think, again, I would say, and I say this often when I do client communications, I do say if you're at all not sure on whether to invest in a particular product, the decision is not to invest on that particular. I'm far happier with that as a promotion to whether you come to us. I think as well, and it's easy for me to say this, but if you ever land on eToro's platform, there's a lot of content. There's academies, there's other people to talk to. So I think, we do try and encourage that gathering of information before you put a trade on rather than after.
Thanks very much. So, Daniel, we've heard a little bit about stable coins, a little bit about tokenization. We've talked about the state of regulation and where we hope it might go. I wonder if you could maybe, from your perch, look around the corner a bit and what might be coming down the pipe as far as innovation goes that, in a year's time we're sitting here, maybe waiting for the FCA, but banging the drum saying we need better guidance on X. What's coming down the line? Well,
quantum's coming down the line, definitely, whether it be here fully in a year, but that's coming. And in terms of that, I think it's a game changer because it basically completely disrupts encryption. So most encryption sort of algorithms, the way they work at the moment is they set mathematical problems that sort of traditional computing can't solve, and quantum can solve them quite easily. So there's something basically called post quantum cryptography, which basically means that IT systems will have to move across to that new setting, that new world, and probably that needs to be done. I think it probably has been looked at already. I'm pretty sure GCHQ are having a look at that, because one of the things that they would be worried about is a strategy called harvest and decrypt, which means what you would do is, if you were sort of a bad actor, is you would steal a chunk of information that was encrypted. So you'd harvest it, even though you can't access it because it's encrypted. You'd hang on to it, harvest it, until you have the quantum computing to decrypt. So that's why that's something that needs to be looked at. And in terms of, I guess, what we can do in terms of regulation, I suppose there may come a point where you start mandating organisations to actually, move across to that. Having said that, I'm not a big fan of what I call like a preemptive strike, because if you look at, AI or any other kind of emerging technology, you often don't fully appreciate what it is or what it's capable of, at the start. And sometimes sort of introducing regulation and legislation can, backfire, because often you don't realise. I mean, to use a probably a loose analogy, if you look at, say, the Online Safety Act, where you ended up having an Irish comedic writer being arrested by 5 armed officers at the airport over something that was supposed to put a protection in place in terms of social media. So that's just an example of how you can get it wrong, and also you perhaps don't even understand what the capabilities or what the implications of certain tech is, because you don't understand it yet. But certainly, I think quantum Web3 is going, and lots of legal challenges are going to come from Web3. And if you see Web3, if you like, as the plumbing, and then you might have like the metaverse on top of it. There's so many scenarios that just don't happen now that will happen when that's in place. And Web3 is also challenging, because with that you've got the concept of if it comes into being of true decentralization, where you'll have decentralized autonomous organizations where most of our law is posited on the idea that there's some directing mind or central governance that you can go after, that you can attack and hold responsible. But when you start getting into true Web3, it's like, well, actually, who is responsible? And then it's it's global and it's cross-border. I could go on and on. There's all sorts of other stuff. IP issues that with Web3, you'll have things like you'll be buying an NFT, and it turns out that actually maybe the NFT isn't what you thought you were getting, because it was tied to property or intellectual property rights that don't actually follow. So. Okay, so the answer is, what you do is, I guess, is you sit down and you look at those that tech, and then you try and map different scenarios and how it might play out. That's going to give you an idea, if you like, an outline, a sketch, a design as to where you might go. But then some of it is going to be a waiting game, because you don't yet know what the end game is. Sorry.
No, that's a kind of scary-ish future ahead. And
but I mean, it's a bit like, if you think way back, people are saying, like, what's the internet? What difference will it make?
Yeah, exactly. Well, again, the lawyers will be chronically employed.
Yeah. Or unless we're replaced by AI, which is looking more and more possible.
Yeah. Laura, I guess, given the number of consultations, policy papers, draft regulations, stuff out today, I'm going to ask a question that I'm sure everyone's going to scribble down the answer to, but don't be alarmed by that. What's your view on the timeline for a mature, credible framework in the UK?
from my discussions with the FCA, they are working towards getting all the policy statements out by next summer. So the consultations will continue until early next year. Policy statements out next summer, God willing, and then there will be at some kind of time period, maybe till early 2027, until it's fully enforced. But yeah, we're nimble, but it takes us 2 years to get through this.
That's it's a number of cycles in certain assets. If you had to pick one concrete action that the government could take, that the UK could announce, maybe in the upcoming budget, but it doesn't have to be, that would give us a step change and move us towards becoming a global digital assets hub, what might that be?
Well, they've given a lot of announcements over the last several years, different governments even, but then the actions need to follow as well. I hope that this week will make some difference when the Treasury in particular is meeting with the US delegates, and I know digital assets is now on the agenda. So that is great news, and thanks partly to Global Digital Finance who convinced the UK to put it on the agenda because they initially, I believe, declined. But I think one thing is probably as far as they can to influence authorities and regulators to move faster, or if they need budget to move faster, then give them that budget.
Okay. Dan, what's the one thing you'd like to see?
That I think will happen, or?
No, just if you could wave a magic wand and have the UK government take a single action that would help move us closer.
This is purely for selfish from an eToro perspective. If we could get
derivatives.
No, not necessarily.
Oh.
I suppose I can draw a line that would be derivatives, but allowing crypto and ISAs, I think, would be kind of transformational for the market. And there's a lot of hurdles that would have to be had, and I don't think it's going to happen.
Yeah.
But that would be the one thing that I would say that would be transformational for the retail market at least.
And Daniel?
That they would launch a digital assets action plan that was government backed in the same way they've done that with AI. So to take the same sort of approach, and that would be to look at all the levers we've talked about, taxation, incentives, but to put it on a par with AI and to take it as seriously and support it.
Gotcha. I've got one more question for each of you, but I'm just going to look around in case there's any final from the room. Okay. Final question. I'd like you to give us all 2 predictions, each of you. And I want the first prediction to be, let's go a year, maybe 18 months into the future. And I want you to tell us something you expect to happen in the UK digital asset landscape where you've got, 90% probability or 90% confidence that it'll happen. It's probably nailed on already. But I also want you to give us a prediction, same time frame, where you've got really low conviction, absolute maximum 10% confidence that it could happen. But if it does, holy moly, it's going to change the game. I'm going to come this way. Daniel?
Sad to say, I think with some certainty I can predict they will increase regulation and expand the activities that need to be authorised. So I think they'll actually go completely the other way.
Okay. And what's your low confidence but game changing?
That they'd implement a digital action plan in the same way that they did for AI.
Okay. Laura?
I would like to see the stablecoin framework, solid, US challenging one, and then the second part would be token, as in part B of the first question, tokenization as well, framework for tokenized securities. And then second question, we talked about retail access, so I agree with that fully. But then this is probably an unpopular opinion, but I'd like to see a G7 central bank digital currency out. I think it would increase the adoption of wider digital assets.
Cool, exciting. And Dan?
I think I've possibly answered the 10% one already in terms of crypto and ISAs. The 90. I think what we will see in the next 18 months, and I think it will be good for the industry, is a major retail bank offering some crypto product. Now, that might be Revolut through the back door of getting their bank authorization complete, but I think that will be transformational as well. You know, it's a little bit related to what everyone's commenting on. I'd really like to see a removal of, there's still a kind of cynicism that exists. And if I look at things like banks blocking payments to crypto firms, which on an ad hoc basis, that kind of thing infuriates me. We saw the UK Treasury Committee 18 months ago suggesting that crypto should be taxed as a gambling product. You know, these things are not helpful to anybody. So that kind of reduction in cynicism over the next 18 months would be appreciated as well.
Fantastic.
Or not getting bank accounts at all if you're a crypto fan.
Absolutely.
Lots to look forward to. All right. All that's left for me to do is to thank Dan, Laura, and Daniel for your fantastic insights. Thank you very much.